right, here we are with Bill Barhydt, founder and CEO of Abra, a crypto investment advisory service focused on high net worth individuals and family offices. Bill has been in crypto for over a decade. He's super knowledgeable about macro markets and obviously crypto, policy, and so on. So super important hot topics right now that we'll get into. So Bill, thank you so much and welcome to the Defiant Podcast.
Thank you, Camilla. Great to see you.
Great to see you. And let's start with your background, how you got into crypto and getting more color on what Abra does.
Sure. So, I've been involved in the cryptocurrency world since the very beginning of Bitcoin. I have a background in technology, both cryptography as well as payments. And so I understand kind of the intersection of the capital markets now as well as the technology. And it's been a big passion of mine since long before Bitcoin even existed. So I've worked in this world in some fashion for almost 30 years. And, I'm a huge believer in this decentralization movement. Going back to even music file sharing days. And so the idea that we could have a decentralized monetary system and decentralized banking systems is very important to me and something I strongly believe in and something I've dedicated my work life to at Abra.
Awesome. And can you get into more on what Abra does?
Sure. So we're a wealth management platform is our primary function. We help investors take advantage of the opportunities in crypto markets, simply to invest in crypto, earn yield on crypto holdings. As a fiduciary, we provide strategies on investing in crypto and also enable high net worth investors to borrow against crypto holdings. So if you've been holding Bitcoin for a while and you're sitting on significant profits, but you don't want to sell, you can borrow against the Bitcoin to continue to hold and take advantage of future gains. So that's a very popular product for us now. But as a fiduciary, we help clients with strategy, understanding tax implications, the implications of different crypto assets, meaning should I just hold Bitcoin versus some combination of different crypto assets. And that's our primary function as a wealth manager. We support that business with our prime brokerage, which enables trading, derivatives, lending, things like that, which we also do for institutions. So some companies work with our wealth management and prime brokerage to enable like the MicroStrategy playbook. So how do I put Bitcoin on my company's balance sheet, right? So that's a growing, interesting business for us as well. And we have some very sophisticated, knowledgeable traders that really understand not only crypto trading, but the derivatives markets and the lending markets as well. Super
interesting. So when you say that you're allowing high net worth individuals to borrow against their Bitcoin, does the prime brokerage side of the business handle kind of the other side of that, like lending out?
That's a great question. Very good question. So Abra is not the direct counterparty to most loans. So if you go back to what happened in the 2022 bull market cycle, when all of these yield companies were offering crazy high interest rates on Bitcoin, and they were basically using your crypto to do very risky loans. And Abra doesn't do that. So we're not the counterparty to transactions within our wealth management business. Everything is basically treated like an individual vault. So each Abra client puts their assets into a dedicated vault without commingling the assets, and then you make investments from your own vault. When you are borrowing, the assets in your vault become collateral, but Abra is not the one lending you the money. We're actually using DeFi marketplaces to facilitate the loans, which is much, much safer because if Abra goes away, our clients still retain title to their assets. You're not lending Abra any of your assets within our wealth management platform. And that's a big win for our clients because many of them are still fighting to get assets back from FTX and Celsius, BlockFi, whoever. And here, they're not taking any corporate risk on Abra because they're not lending us their assets. They're not a liability on our balance sheet within our wealth management platform.
That's smart. Okay, so on the back end, you're using maybe Aave to
myriad
set.
DeFi protocols depending upon what the client wants to do, what the assets are, but that's correct. And we only work with protocols that have been around for a while, have managed large, TVLs, and have been proven very safe over time.
Okay, great. That makes a lot of sense, and especially after what we saw with FTX and Celsius and
Absolutely.
so on.
Yeah.
Okay, so now I'd love your thoughts on what's happening in the market right now. Everyone came into 2025 with huge optimistic expectations, and I think the market has been a lot more volatile and choppy than a lot of people expected. Bitcoin remains under 100K, ETH under 3K, and there's all these concerns about. Recently, the U.S. imposing tariffs on major trade partners. Would love your thoughts on kind of the what's explaining the current market volatility in crypto.
So let's take a step back first, right? So before the election, let's say late October, Bitcoin was trading around high 60s, 70,000. Okay. And it ballooned immediately after the election up to 105,000. Right. And why did it do that? Well, I believe that the best analogy I've heard is, think about if you're in a pool and you're holding a beach ball and you hold the beach ball underwater and then you let go. What happens to the beach ball? Shoots up. Right. So think of crypto being a beach ball, and the SEC basically holding that beach ball underwater for 5 years and let go, and it shot up. That's what happened when we reached 105, meaning I believe that the kind of baseline value of the crypto markets was probably 40% undervalued, maybe 50% undervalued at least, because of this U.S. regulatory overhang. Maybe another 20% based upon China, maybe 25% based on China. So if China was to make some announcement like that, we'd probably see another 25% movement. Beyond that, meaning day-to-day movements in crypto asset prices are driven by market liquidity. News cycles may be catalysts for certain things, but generally the movements that we see kind of intra-month are liquidity driven. So in other words, what's happening with M2, US and global? What's happening with interest rates, oil prices, right? That's what drives stock prices long term, because they act as a liquidity suck on the devaluation of the dollar. Bitcoin itself is a levered bet on that, because you can add more shares. Apple can issue more shares tomorrow and dilute all their shareholders. Bitcoin cannot. So the fact that it has a fixed float that inflates at a very predictable rate that goes to zero over time makes it act like an exponentially growing levered bet on the devaluation of the dollar. Hopefully, there's a lot of words there, but hopefully that all makes sense.
No, definitely does. Yeah. Go ahead.
And so certain altcoins, like certain alternative L1s who are much earlier in their adoption cycles, tend to act like a levered bet on Bitcoin, because they're repeating the adoption curve of Bitcoin, but are much earlier in their evolution. So if you look at Ethereum, Solana, now Sui and Aptos. Aptos has had some personnel issues in their foundation. So, they have some issues there. But putting that aside, the other crypto assets have really acted very similar to Ethereum in previous cycles. And Ethereum is still acting largely like Bitcoin. If you look at its multi-week chart, it actually looks like it's in a consolidating rising wedge pattern over several years, which is exactly what happened to Bitcoin after the last cycle. So these things don't always mirror each other exactly, but in this case, history is definitely rhyming. And in the last couple of cycles, Bitcoin dominance peaked at like 70%, and then altcoins ripped for 18 months. Ripped like 50x. Okay. And so if we get half of that, right, which I think we will, at least half of that movement, crypto asset prices are about to explode. And I think that the government is in a position right now where, if you look at China, US, Europe, we're having this kind of global race to the bottom in terms of purchasing power of our currencies. Everybody's trying to devalue their currency faster. And the US is likely to win that race, because when we do things, it has an outsized impact on global economy versus other markets, right? Makes sense. So I think the U.S. will win the race in terms of devaluing its currency. DXY fell precipitously today as we're recording this. And, I think you'll start to see global M2 rising significantly, initially led by China, who's in a serious recession. They need growth to be 2x what it is to basically get inflation to where they need it to be, given the kind of earlier, stages of their economy versus developed markets. And like I said, Trump's stated goal is to weaken the dollar and to get treasury rates way down. The U.S. needs to refinance about $7 trillion in debt that we initially financed during COVID at near zero interest rates, when Trump actually said we should basically create 100-year bonds because we're never going to get a better deal. Turns out he was right again. And because we didn't do that, now we have to refinance. And at current rates, it's a disaster because you're probably adding $1 trillion in interest payments to our debt load. And so that's where we are. But all of it points to more money printing while the governments try to start to get their houses in order. So I think what Doge is doing and other kind of macro activities will have an 18, 24-month impact on the economy in a very positive way. But that doesn't address the short-term structural issues that I'm talking about.
Okay, so long term, what you're seeing is lower interest rates, higher liquidity in markets, dollar and global currencies becoming weaker as governments compete to make each of their local currencies weaker, and because of this increased liquidity, that usually has the effect of increasing risk asset prices, and so that obviously impacts crypto. Is that kind of the overall?
Yeah, I'll just caveat the interest of the first thing you said about long-term interest rates. So my comments were mostly about short-term rates, where Trump's stated goal is to get short-term rates down. If we don't change the structural issues around our debt and trade imbalances, long-term rates have to go higher because no one's going to want to buy our debt. And there's going to be too much of it in circulation. If Doge is successful in getting us to a balanced budget, less than 2% of GDP, so that GDP growth can actually start to pay down debt, then I think you're going to see interest rates come down because the relative demand for debt will go up because there'll be less of it floating around. That's the equation, right? And we don't know where we're going to come out on this because we also don't know who's going to win when Trump retires because he only gets 4 years in office and really 2.5 years to make a difference. So assuming that the trend continues, what we're seeing of the first 10 days of Doge, you could be very encouraged about the potential for long-term rates coming down organically, but we've got a long way to go before that happens.
Okay. So you said earlier that how these cycles usually play out is that you see an increase in Bitcoin dominance, and then the rest of the market altcoins catch up after that and rally after Bitcoin. Where in this cycle do you think we're at now?
The very beginning. So if you look at the channels for altcoin versus Bitcoin dominance versus altcoin prices, I published on Twitter a chart that basically shows a box around the altcoin price and Bitcoin dominance. And we're at the very, very bottom of the channel now. That's repeated itself multiple times over the last few years. And, we're at about 64 point something, let's say 64.5% of Bitcoin dominance. It's peaked the last two cycles at 71%. So Bitcoin could go up relative to alts for another couple of weeks, maybe till the end of February. And maybe it doesn't have to get to exactly 70%. It's possible it already peaked last week at 65%. Either way, it doesn't matter, right? Because either the trend is broken.
Oh, go ahead.
Either the trend is broken and it doesn't matter, or the trend stays the same and the money printing causes a levered bet on alts to go to Valhalla, which is what I'm betting on, because I really see no difference in the markets this time. Everybody's talking about inflation the last 2 days, and that's all nonsense because the way they report it is so messed up. Inflation is actually falling structurally, right? If you look at real-time inflation data, prices are coming down. What they're doing is they're taking housing and services data, which tend to be trailing indicators, and using them as kind of the core CPI and PCE numbers right now, which to me is very misleading. And so if you look at the real-time inflation data, it actually points to a significant slowdown in economic activity in many areas. Now, purchasing managers are bullish right now. And maybe that's because they see prices coming down in real time. I don't know. But that usually is a good mix for a healthy, growing economy, right? Because you've got purchasing managers being bullish, which means they want to spend. You've got real time. It looks like structurally prices are coming down. And I realize the data doesn't support that right now. The CPI data doesn't support that, but my data does. And I think my data is more accurate in real time because the government uses 12 months of data. They don't they don't report real time data. And historically, that confuses a lot of people, right? And that's often why the first reaction that markets have to these real time these reports on CPI is wrong. Because yesterday markets tanked when they reported CPI, and then they spiked a few hours later when they finally absorbed the details of the information behind the headline numbers.
Okay, so a few points there. First one is you believe that we're close to the point where altcoins should begin to outperform Bitcoin. So are you recommending your clients to position their portfolios that way? Like which altcoin specifically are you recommending?
Yeah, so we think the alternative L1s will outperform Bitcoin the second half of this year. Ethereum, Solana, Sui, maybe Aptos, and clients that are interested in that kind of investments, with a certain part of their allocation, we are recommending that. Our funds have a significant allocation to those assets. Personally, I'm a big believer in Sui as kind of the next Solana. Solana has taken over the mantle of the most profitable blockchain from Ethereum. It's now 80% of smart contract revenue is now Solana based from zero like 2 years ago. And the percentage of revenue generated on Ethereum has fallen, by 80%. So that is remarkable, right? And so you're going to see that I think you're going to see this triumvirate of Solana, Sui, Aptos winning a lot of the developer mindshare, which is probably the most important metric of all, because if you follow the developers, you kind of follow the price action and long term. And that seems to be what's happening, right? So there's a certain number of developers that are going to these L2s on Ethereum, like Base and optimism and whatnot, but the real action is on these new L1s.
It's so interesting to see what's happening with Ethereum. Interesting points you're raising there about Solana becoming more profitable than Ethereum. I think that's something very few people saw coming maybe a year or two ago, especially after kind of the FTX collapse. So the rise of Solana has been such a surprising trend, but it's really kind of consolidated as maybe kind of the third biggest L1. With Ethereum, do you see it? Do you see any kind of catalyst that might reverse its underperformance? There's the Pectra upgrade. This like shift in the Ethereum Foundation. They're trying to find their footing. What's your view on kind of that trajectory?
Yeah, look, we're bullish on the overall value that Ethereum is creating for users. We're big users of Ethereum as a DeFi platform for our clients to generate yield, one of the biggest actually. However, from a revenue perspective, the value is actually accruing in L2s, and they generate almost no revenue just because of the way they work. Base generates zero revenue. It's really a centralized platform run by Coinbase to allow people to batch transactions onto Ethereum. I think Ethereum's problems are structural and architectural and cultural, meaning they made some poor architectural choices that have limited its scalability at the base layer, and that has caused this kind of massive growth in this layer 2 market, which doesn't really have a business model other than basically creating stickiness within the Coinbase ecosystem, which has nothing to do with decentralization, which is why most of us are here in the first place. So that's a problem for Ethereum. We don't use the L2s at all, and we won't. It doesn't add any value to us. So I think you're going to see a migration of DeFi for certain applications to the other L1s that I talked about, Solana, Sui, Aptos. And you're going to see a lot of institutions stick with Ethereum because they're more comfortable with the security and the decentralization, and they're willing to pay a higher price for those gas fees, those transaction fees versus Solana and Sui. And I think that's going to stay true for a while. And then, in the next couple of years, you're going to see the other L1s catch up in terms of decentralization and security. And that's going to represent an even bigger challenge for Ethereum. But I think they're going to have to make some hard choices from an architectural and cultural perspective to compete, right? And that's going to require, in my opinion, a pretty major rethink of their platform strategy. And I think they're going to have to seriously consider some significant changes to their architecture. We'll see. That's my prediction.
What about, if L2s continue driving a lot of activity, which they have been, enough that the activity that's happening on L2s ends up providing enough activity to the Ethereum L1 that it kind of, so that Ethereum becomes deflationary again, and there's ETH being burned like it was before. Do you think that could happen, or
it's possible? I don't. It's not something that I think about right now. I have no visibility into that happening. I'm not. We're not users of that, so it's hard to say. But like I said, I'm not bullish on. I'm very bullish on the existence of Ethereum. Its smart contract model. It's just its scalability. Its overall architecture for scaling is outdated and needs to be rethought, in my opinion. And I might be a minority on this. I really might. Certainly, the L2 companies don't want to hear this, right? I mean, if you remember the early days of Twitter, they had these APIs, and there were all these third-party apps that were built on Twitter, right? They're all gone.
Yep.
Where'd they go? Why did they disappear? Because Twitter basically realized that they were basically allowing these apps to accrue value and consumer relationships that they should be owning. So they fixed their architectural issues, they fixed their usability issues, and it all went away. Right. So Ethereum has a similar problem. It's just a bigger challenge in a decentralized system where, the foundation and the current platform are not the same thing, because you can't just make wholesale release. It's not owned by a company. So they can't just make wholesale changes and release them like Microsoft would. It doesn't work that way. So it's running having a decentralized software platform and then deciding on changes is extremely complicated, right? Because Vitalik may be the benevolent dictator at kind of a foundation level, but for the running system, it's not owned by anyone. So deciding on changes is very difficult.
For sure. One more question on Ethereum, and then we'll move on. But sure. I just think you do have a really interesting position on this. So interested to hear more on why you are not using Ethereum L2s.
We don't need to. I mean, because of the size of the transactions we do, the costs on Ethereum are meaningless to us. And, we can interoperate with the largest DEXs and DeFi contracts at large scale. And scalability challenges are not a problem for us because we're not doing $50 transactions, right? If you're doing $100 stablecoin transactions when you're competing for, transaction space on Ethereum, and that pushes gas fees to $25, that's a problem. We don't do that. So we don't have that problem.
Makes sense. Super interesting. All right. Shifting gears to policy, which obviously a huge theme with the new U.S. Government. So what are some of your predictions there? How do you see crypto policy changing and regulation changing in the U.S.?
Yeah, so we're going to get some clarity on stablecoin regulation at the federal level. I think with the nominees for the OCC, for the CFTC, and the SEC, all basically coming from the crypto world, I think we're going to see a convergence around clear rules in a few different areas. But, we could start with stablecoins. The bill that the House published in draft form was very interesting. I think it needs some work, but it's definitely workable. It doesn't deal with remittances very well. It doesn't deal with stablecoins issued outside the US. So, for example, if you do a Swift wire in euros from Germany to the US that land in dollars, the banking system can deal with that, even though the euros aren't issued in the US. The way the current bill is written, it wouldn't allow for that because you wouldn't be able to use a euro dollar issued, it's a stable coin in euros to send money to the US. Doesn't make sense, right? So they have to fix that. And I think they will. But I think it's workable, right? And so, but the clarity will come in the form of who can actually issue stable coins, which stable coins can, federally chartered entities hold, and et cetera, et cetera. So there's going to be some clarity there, and that will help a little bit. I don't think there's a big problem with stablecoin regulation as is, but banks want the clarity, brokers want the clarity, other e-money companies want the clarity. They'll get the clarity. Okay, fine. Then within the kind of commodities world, right, you have this confluence of what's a security, what's a commodity. I think the CFTC needs to basically work with the SEC to provide very clear rules that, okay, if something is decentralized without no off switch, its underlying asset has to be a commodity. There's just no other way because you can't shut it off. So how can something be a security if it has no off switch? Because you can't sue anyone by definition, right? There's no liability. Generally, if something is a security, there's underlying liability somewhere. Does that make sense, right? So, but if it has no off switch, by definition, who are you suing? Right. Mm-hmm. So
there's nobody responsible for it.
Right. Exactly. So maybe the original developer, but we'll come back to that in a second. Right. So I think we need clear understanding that something can be, once it's become sufficiently decentralized, it's outside of the purview of the U.S. government in general. Right. Because, again, by definition, what are you doing? So then there's this question of, OK, I've launched a new software platform that has a token. That token may have a governance token, which accrues dividends. Right. But it has an off switch. Right. So maybe that's a security, at least in its early days. But the intent is for it to become decentralized, like an Aave, for example. And there's a movement now for those governance tokens to actually accrue the revenue that currently goes right to the company, right, to Uniswap or whoever, right? And that doesn't make sense to me. It's the token holders that should accrue that revenue, and Uniswap should simply have their share of the tokens as the founder of the platform. So then the movement becomes, okay, it starts out as centralized with an off switch, but it becomes decentralized relatively quickly over time. There should be a sandbox of intent within the SEC and CFTC that says, okay, here are the risk disclosures. Here's how we raised money under, Reg D or Reg A, whatever, Reg S. And we want a regulatory sandbox that allows us to operate as if it was decentralized on the understanding that it will become fully decentralized within 36 months, something like that, right? I just made that number up. I think that's where Piers is going in her belief of how this should operate, as opposed to Genza, who says everything's a security for all time, deal with it. Which was nonsense out of the gate. And I don't even think he believed that. I think he basically had other agenda, wanted to be Treasury Secretary, that was his deal with Warren, blah, blah, blah. I don't think he believed that. I still don't think he believes that. Okay. So, but at least Piers has no agenda other than doing what's right, it appears. And I think that doing what's right is probably the creation of a sandbox for these type of token projects. And then there are some lingering questions beyond stable coins and going from security to commodity and things like that. What happens to traditional equities, right? Why do we have T+1 settlement in traditional equities in 2025 when they should all work like crypto assets and governance tokens? They should have real-time settlement. They should be tokens. You should be able to do self-custody, third-party custody, just like crypto assets, right? And it begs the question, what is the benefit of the existing system other than the fact that it's been around for 50 years, right? And so its time has come, right? And it needs to go. And so, so there's a whole bunch of issues there that they have to deal with because, these next-gen ATSs, alternative trading systems, they should be token-based. They shouldn't be, if you want to compete on straight through processing and real-time settlement, which is what DEXs in the DeFi world enable, right? It would be awesome to see international ATSs that are DeFi based enable 24/7 always on real time trading of, US listed shares. That's the way it should work today. Traders might not like it because it's 24/7 and they don't get any downtime. But those of us at crypto know how it goes. I mean, that's the real world, right? Anyway, so I think there's a bunch of issues in this regard that we can really dig into with the goal of making the US the place that everybody wants to use as their development home. And the US is really taking charge on making these next generation digital asset based solutions. And we haven't even gotten AI yet in the intersection of the two, the leader, and the US firmly entrenching itself as the leader in these systems. Just like we leapfrogged Scandinavia on smartphones, right? Because the action used to be in Finland and Sweden in feature phones in the 90s, right? And then the US came along and smartphones leapfrogged them. I think we have a chance to leapfrog Switzerland and Dubai and Singapore in crypto and digital asset technology now, by creating very clear rules, giving developer sandboxes, removing silly developer liability. Developers shouldn't be afraid of getting arrested for writing code, right? And so I think this is kind of a new day is dawning, as we would say, in crypto in the US.
Yeah, I absolutely agree. I think it's I saw all of these promises with a lot of skepticism during Trump's campaign. But yeah, so far it's been really encouraging to see, him and his administration follow through on a lot of these promises. So it's looking good. And I agree. I think stablecoins, getting clarity there, having this sandbox for startups to become sufficiently decentralized over time. And yeah, Pierce has been advocating for this model forever. So I think she's hopefully going to push that. And then once the startups or protocols are sufficiently decentralized for those tokens to be considered commodities, so they don't fall under securities regulations, I think that would all be extremely positive for the industry. And then yeah, like you said, crypto markets is one thing, but I think the entire financial system should upgrade and should work on blockchain rails. It just makes sense. It's more efficient. So yeah, all assets should be tokenized, stocks, bonds, even, I don't know, property deeds, whatever, everything should work on chain. But I don't know. For me, it's natural that it will happen over time. I think the question is, how long it takes, what regulations we need to see passed for that to happen. But at least I think we are on the right track now, finally.
Yep. I think that's very astute. I agree wholeheartedly with that. There's going to be some very healthy debate. People have got some turf to protect. That's fine. It is what it is. But I'm encouraged and believe that in general, this administration will pretty much do the right thing and mostly get out of the way, right? Which do no harm. It should be a guiding principle. I have yet to meet a consumer in the United States who says, "Please protect me." I don't. I talk to hundreds of consumers or thousands of consumers a year, and in my world. And what never comes up is, oh my God, I hope they protect me from myself, or I hope they protect me from buying this or investing in that so that I don't do stupid things. Nobody says that. The only people who say that are Elizabeth Warren and Maxine Waters, who are out of touch with real people and people who think for themselves. And by and large, people just want the government out of their lives, and they want fraudsters, punished. And so if you commit fraud, SBF style fraud or Mashinsky style fraud, okay, we have a police department, whether it's federal or state or local, that should deal with that. And that has nothing to do with clear rules of the road, because fraud is fraud, right? So by and large, these rules should enable the deep state to just get out of the way, reform itself, right? And let innovation compete for the hearts and minds of businesses and consumers.
Yeah, for sure. What about, there's obviously people are encouraged with what Trump is doing with crypto, but there's also a lot of, or some criticism with, him issuing his own meme coin, and his family, issuing meme coins, and some of the things that this DeFi entity, WFLI, I think, is doing, kind of with them, tweeting about a token and then buying them. I don't know. It just like, it looks a bit messy to have like the president issuing a meme coin and like all this activity. People say it could be liable to manipulation, and there's reasons why. Yeah. You don't have that in kind of traditional markets. Why would you allow that in crypto? I don't know. What's your view on kind of transactions?
Yeah, it's a good question. There? Look, I mean, I think legally he's allowed to do it. He's a citizen like everyone else. You and I can create a Camilla coin. I can create a Bill coin. My guess is no one will care. No offense to you, but they certainly won't care if I do it. Maybe they'll care more if you do it. But obviously they care if the president does it. But the bottom line is, I don't think he knows in detail what a meme coin really is. In other words, I don't think that Trump and Melania were deeply involved in, I don't know for sure, but I'm skeptical and doubtful that they were deeply involved in the creation of these meme coins. They certainly don't need the money. And they don't need the hassle, right, of negative PR or whatever. So I think my guess is that there are people around them that think this is fun or interesting, or maybe, do need the money, and convinced him, hey, I've been there for you. I need this favor. I don't know. I really don't know. But I think the bottom line is I'm skeptical that he was, intimately involved in the creation of some meme token, and even in detail knows what it is, or has ever, seen a crypto exchange interface, right? So he's not known as somebody who's uber passionate about using technology in general. And neither is she. Now their son, Barron, my understanding, is all in on this stuff. So it's possible that he was pushing for it, but he's also a pretty smart guy for a kid, and I'm guessing he knows that this isn't a good look for his dad to be focused on that. So I'm pretty skeptical that it was the family itself that did this, but again, it's silly. It'll be forgotten in a couple of years. It's not the most important thing that we should keep, it's not the ball to keep your eye on, not the big prize. Probably shouldn't have happened. I don't really care one way or the other at the end of the day. And I think it will be forgotten in a couple of years anyway.
Yeah, no, I agree. I think what we talked about, kind of the policy shift, that's what's really going to move things forward. And yeah, this is just a detail, but I mean, still kind of a bit odd. But anyways, yeah.
If this is our biggest problem in crypto compared to where we were 3 years ago, I'll take it.
Yeah. No, yeah, for sure. I would rather be worried about the president launching a meme coin than the SEC, tracking down every single, suing every major crypto project.
Every yield company failing, FTX, CEO getting arrested, all that crap. Yeah. Again, I'd rather take this as our biggest problem than where we were in 2021.
So, okay, so you deal with family offices, high net worth individuals. What sort of shift are you seeing in their attitude toward crypto? Are you seeing more demand for crypto from this group of people? Maybe more willingness to actually use it, or is it more like, okay, just like tell me what to do, like you custody it, you take care of it? Like, what's kind of the attitude?
Yeah, good question. I think there's three camps when I think about this, right? There's a camp of people who probably bought Bitcoin a few years ago, a little bit, right? We see some reasonable percentage of the family offices we talk to, they say, yeah, I bought some Bitcoin a few years ago, and it's done really well, and we're glad we did, and we want to know what's next, what do I do as a fiduciary? Give me your advice, et cetera, right? So, that's great. And then the second camp is like, okay, we've seen the ETF launch. We've seen BlackRock and the other, ARK and the other companies fully support the ETF model for Bitcoin. We feel that we have no choice but to dig in and understand this now. Right. And we've bought some, Bitcoin via the ETF, and we want to know what to do. What's next? What do we invest in? What should our allocations be? Should we be borrowing against the Bitcoin holdings now that we have significant gains? And then we have a third group basically says, look, I don't understand any of this. We've done nothing. We think it's interesting, but we don't know anything. So please help us understand this. And that's by far the biggest group still, right? Which is very telling, right? So we're early in that regard. But the knowledge of the subset that has dug in is growing. We get a lot more intelligent questions now than we did, let's say, 4 or 5 years ago, for sure, when it was all about just the basics. What is this stuff, right? We don't get the what is this stuff as much as we did before. But it's earlier than people who are knee deep in this space really believe.
Interesting. What about the demand compared to previous kind of bull runs? I don't know. Are you seeing similar levels of inbound than in 21, 22? How would you compare both cycles?
Yeah, retail generally comes last. We saw that last cycle. I mean, once the COVID money printing started and people were working from home, retail came in droves. That was going to happen anyway. It was just exacerbated by people working from home and stimulus checks. But here we're seeing the same thing, right? Retail interest has been muted except for the ETF, and that's just really 401k and IRA allocations mostly. A little bit of day trading, but not much. It's mostly 401k and IRA allocations. And so, I think that as liquidity comes in this cycle and interest rates fall, which, gives people the perception that their homes are worth more, which is their biggest asset, more money tends to come into risk on assets. And I think you'll see that in this altcoin cycle, the second half of the year. People just feel like they're wealthier when interest rates are lower. And it's mostly driven by their home values, but it's in general, that's always been true.
Okay, so maybe more muted demand now, but you're expecting that to pick up in the second half.
Consistent with previous cycles, yes.
Yeah. I'd love for you to talk more about this growing trend of companies keeping Bitcoin in their balance sheet as similar to MicroStrategy. Yeah. You said you're seeing kind of demand with that to do that in Abra. So how is that? How does that work?
Yeah, that's been a really interesting phenomenon for us. We're seeing a lot of mid-sized companies now and also nonprofits that want to execute the MicroStrategy playbook. In other words, taking cash in their balance sheets, converting it to Bitcoin, potentially borrowing against it in the future, getting a small amount of leverage to increase the Bitcoin holdings. But yeah, the demand, the interest, some companies they see it happening and they say, look, we don't understand the implications of all of this, and they want to learn. So that's fine. We're doing a lot of free consulting in that area to help companies understand the implications. The recent changes to the Federal Accounting Standards Board's rules on how to deal with Bitcoin as an intangible on the balance sheet have also helped tremendously. So up until December, Bitcoin in the balance sheet had a funky kind of accounting rule, which was, okay, you buy the Bitcoin on the balance sheet. If the price falls, you have to remark the value of the Bitcoin. But when the price goes up, you can't remark it higher. You have to keep it at the lower price, which is the dumbest thing you've ever heard, right? But now they can do real-time mark-to-market based upon the actual spot price at the time they're doing the mark-to-market, right? Which is what it should have been all along and makes perfect sense so that companies can actually show the price gains and losses for when they're holding the asset on the balance sheets, right? So companies like Tesla and MicroStrategy have gotten huge windfalls on their balance sheet because of this. And it's had certainly in the case of MicroStrategy, an unbelievable impact on the stock price. But pretty much every public company that has done this has seen an instantaneous benefit to their stock price because the market doesn't discount the value of the cash anymore. When you hold cash in the money markets, it's not keeping pace with inflation. So the markets generally devalue that cash by at least 50%, whereas now they're doing the opposite, right? They're giving you actually an incremental benefit for converting the cash to Bitcoin as opposed to devaluing the cash.
But what happens in a bear market? I mean, isn't this a huge risk for companies, especially if they're borrowing against their Bitcoin?
Two things,
could this
right?
all just like blow up incredibly badly?
Right. So two things to understand, right? You know, in general, if you look at the exposure from a leverage perspective, like I think with MicroStrategy, you're talking like less than 20% leverage, which means that Bitcoin would have to fall like 80% for any of the Bitcoin that they're holding to get liquidated. Not to mention the fact that the leverage happens through convertible notes, which they're converting to shares, which the fixed income markets love because those shares are liquid in real time. So they can generate profits on the loans that are dwarfing the profits they're getting in the bond markets. That's why they're willing to do this, which means it's not easy for private companies to have the same playbook because they can't get the leverage as cheaply as MicroStrategy can. That's number one. Number two is, look, Bitcoin, as we discussed, Bitcoin is a bet on market liquidity, which basically means that as we devalue the dollar, we're increasing market liquidity, and Bitcoin sucks up that liquidity. The only way that the game stops is basically the U.S. stops devaluing the dollar with sound economic policy, which means no more money printing, no more structural deficits, no more financing foreign wars, and we're a long way away from that, right? And so even when that happens, which I think it might happen, it still acts as an insurance policy, just like gold and other things, on poor monetary policy long term. Not to mention the fact that it's got this utility in cross-border transactions that gold doesn't have. So there is a chance that the world gets its act together and Bitcoin loses its utility. I'm not going to bet on that happening anytime soon.
But Bitcoin in the end trades, like you said, a lot more on macro factors and liquidity.
Today.
And like also just like risk appetite, which is in line with liquidity in the end, right?
You have to also keep in mind that Bitcoin is still in an inflationary phase. The inflation is slowing tremendously, but the amount of Bitcoin that's being locked up is scaling quickly, meaning the amount that's available to buy or trade on the open market is dwindling. And so as that inflation slows, which it is, every 4 years it slows even more, and as more and more Bitcoin is locked up and not available for trading, the dynamic that I'm talking about is changing. So that results in lower volatility for Bitcoin each cycle. So in previous cycles, like the first cycles, we saw 80% swings. Then we saw 60% swings. Now we're seeing 35% swings in Bitcoin, right? So the volatility, now the alts are trailing because they're newer. But because Bitcoin has been around more is locked up, the volatility is actually decreasing over time, which is what we all expected. So.
What do you think of, related to that point, of the super cycle theory, that, at some point we'll stop having these huge, ups and downs, and it'll all be just like continuously trending upwards?
I see no reason to believe that the model of decreasing volatility in liquidity cycles is going to stop for the next 10 years. Maybe beyond that, I don't know, but I think there's going to be structural changes in the existing fiat monetary system in the next 15 years as well. So there's so many moving targets there that no one knows what the hell they're talking about, including me. So I think what I'm saying is more accurate the closer you get to today, and the less accurate the further out you go. And the question becomes, the further out you go, do we get our economic house in order and turn the dollar into a sound monetary instrument again that might be inflated 1% a year at tops, and believe in deflationary economics? Or does Bitcoin just go to Valhalla forever, because we have no political will to fix the monetary system.
Impossible to say.
Exactly.
But okay, to wrap up, I'm interested in your views on DeFi, and how you think the overall financial system might evolve, considering the things that we're talking about, changes in policy, and macro, and just like overall increasing interest in crypto. Do you see a world where blockchain becomes the underlying rails of finance, and DeFi becomes the backbone of it, like similar to what you're doing?
Yeah.
Like you're interfacing with investors, but using DeFi in the back end. Do you see that like being the norm, or will it continue to be still niche?
Yeah, I think what we call DeFi banking today will soon just be banking. And all banking systems will be based upon DeFi-like rails, just like we talked about earlier, that stock trading should be done based upon tokens, right? And governance tokens should accrue dividends. I think banks themselves should be using DeFi rails that use open marketplaces for lending and yield, and they operate 24/7, and that's how it's going to work. Meaning it won't be called DeFi; it'll just be called banking. Right? Most people have no idea how the inner workings of a money market or a repo system work. No idea. They don't even know what the words mean. But we just call it banks. And what I'm saying is that those kind of central banking based monolithic systems are going to lose, and they're going to be replaced with decentralized systems that put, more of the power in the hands of the people as opposed to governments at scale. And maybe some of these banks don't exist today. Right? Just like it's not incumbents like Blockbuster that owned the streaming world. It was companies that didn't even exist when the dot-com era started that ended up owning streaming, right? Amazon Prime, Netflix, Apple Plus, whatever. Those entities didn't exist. And I think something similar may happen in banking because the banks will just be too slow to make the transition. I don't know. It makes sense to me that that's the way it plays out. But regardless, this is the future of banking. I just don't see how mainframe-based systems and systems where you have borders and closing hours and 4 days to settle a wire win versus DeFi.
Absolutely, I agree. And then to wrap up, wonder if you have price predictions for Bitcoin, ETH, or any of the major cryptos that you look at.
Yeah, so I published predictions a few days ago, and again, what I did is I looked at the previous cycles of Bitcoin dominance, altcoin seasons following Bitcoin dominance. And when you do that, it basically points to a pretty significant run up in all crypto assets, meaning Bitcoin goes higher, but certain altcoins go much higher. So, for example, I think that the floor on Bitcoin could easily be 350,000 this cycle. I'm sorry, the peak could be 350,000, but with Solana going to 900, Sui going to $25, Ethereum going to 8,000, et cetera, with the high end of the range being 2x those values. And so that sounds incredibly high to a lot of people, but when you look at the previous two cycles, it's actually a smaller percentage gain in overall crypto market cap value versus those previous cycles. So, just given the risks around liquidity being more muted this cycle, I think that's a reasonable guess if you believe, like I do, in this whole kind of Bitcoin dominance leverage that's playing out. And it does, so far, it looks exactly like Trump won in terms of where DXY was, where global M2 was, where Bitcoin dominance was. It all looks exactly the same. It's scary how similar it looks. And so I'm just basically extrapolating that, factoring in maybe a little bit less liquidity in the system versus the last cycle, and getting to the prices that I'm guessing.
And in what timeline are you seeing that?
Next 15 months, 16 months.
Well, let's hope you're right. That sounds incredibly bullish.
Yeah, I mean, look, Bitcoin went up, 5x in the last year? Mm-hmm. So another 2x isn't like insane.
Nice. Okay, well, Bill, this was super interesting. Really appreciate your time. really kind of great to talk to you about macro policy and your views on crypto and DeFi. Appreciate you coming on.
Thanks, Camilla. Really great to see you, and appreciate the time.